do you have faith right now in the economy and, more importantly, the folks who are shepherding that economy?
Well, no. Let me put it out there. The Fed has not done well in the past 3 or 4 years in terms of, or 5 years, in terms of trying to find that magic Fed funds rate that will neither increase inflation or produce deflation. And so, are they wise enough now to know exactly what the Fed funds rate should be at any point in time, or even, 6 to 12 months down the road? I'd be very cautious, and I'd view economic statistics like they do, but from an investor's standpoint that speak to fundamentals that the Fed isn't necessarily following.
Well, let me ask you, what would you do different if for some reason you were magically in the shoes of Jay Powell? What would you do different at this point?
Well, I would stop quantitative tightening. I think that's just not a correct philosophy and policy at this point in time to continue to tighten quantitatively. They should leave the reserve balance around $7 trillion and just see what happens going forward. I also think that, yes, the Fed should lower interest rates over the next 6 to 12 months. Real interest rates are simply too high. The 10-year real interest rate is 1.8%, which historically is very restrictive. And, I think not only the Fed, but I would like to see the real interest rate on a 10-year come down to 1.5% or 1%. And so the way to do that is to lower interest rates from where we have it now at 5.25% for Fed funds, and to, basically balance out real interest rates and lower them so that the economy won't go into a significant recession.